Okay, everyone. How's everybody doing? Okay, so let's get started here. I'm going to do a lecture. I was watching the XPR. I was setting up the recording for this, and I saw it just flipped up a little bit here. I moved all my monitors over to watch this still. Remember, I said it had to break 30. Now it didn't break 30, and now it's rallied up. So just let it go. I thought we could retake this if it broke 30 on the 15-minute. It didn't do it, and I think that it's just a mess now. The short move was the one that we got. I mean, that was the one that we got. If this was going to come in more, I think it would be doing it by now. It's too late. It's 2:15. So the fact is that this gap, you just got to be off of it. All right. So I think most of you were out of it with me. And if you took the original trade and had the stop over 49, I would lower the stop. Didn't take any out. I definitely lowered the stop over 45. Okay. All right. So good. We did SPPI. Jay's asking me how did the morning go, and then we did a really good trade in the XPR, and I'm not sure how everybody managed it, but you know, I was out of that whole thing into that drop, and then was looking to redo it now, and it's just not going to continue. So, you know, we got it at the top, but the reality is, I said I don't think this is going to go red today. I did say that a couple times, and that's why I took the whole trade off into that lunchtime drop. Plus, I knew I didn't want to get it back into a rally. If we had held that whole trade, which I actually had some decent size in it, then we would be back up to our price, basically right in here, into the 2 o'clock, 2:15 reversal time. Do you see? Again, this just reconfirms everything I'm saying about, you know, booking money in chunks, you know, to be profitable as a trader. Okay? All right, so let's get going with the lecture. I was watching that XPR. I thought EXPR to see if we can get it under 30. It doesn't look like it's going to do it here, so just let it be. Just let it be, and we're going to do the lecture. And hopefully everybody had a good day. You know, everything worked, but at different time frames today. That's part of the process of learning how to get these things at the right entries. And we really did that EXPR very well today. So good job, everybody that did that with me. So today I'm going to do a little lecture about earn more, risking less. And this is a lecture actually about risk more than anything else. So let's talk about it. Okay? For those of you that don't know me, my name is Melissa Armo. I own a company called the Stock Swoosh LLC. And I think most of you do know me, but if you don't and you would like more information about my teachings or the room, you can email me at melissa@thestockswoosh.com. In fact, I'm going to write this down here right now for you, in case you need to email me today. We're doing the room open house for the rest of the week, so please feel free to come back. Today's Wednesday. It's Wednesday, Thursday, Friday, and you feel free to come back. I usually go over specifically morning trades. Instead, we ended up trading a little bit late today, and I had this lecture planned, and we're even starting late now. But we will go over trades tomorrow for sure, and we'll have time to do that Friday as well. So let's get started. What is risk? Well, let's look at the definition of risk. The definition of risk, it's a verb to me, means to expose to the chance of injury or loss, hazard, to venture upon, take or ruin the chance of. That's the real definition of risk when you think about risk. In reference to the overall definition, not just for trading, but anything that you're doing, it's to expose to the chance of loss. Okay, this is what this means in reference to trading here. That this is what we take a chance when we trade. Any trade that we place that we do, we're taking a chance that we could lose in the trade. There are different levels of risk. There are many different levels of risk. Some are defined in our minds, and some are not defined because the outcome is not always known. All right? The outcome is not always known in every level of risk that exists on the planet. Some levels of risk have a predetermined outcome. Like when you take a trade and you say, I want to risk $150 today in this trade, and therefore you put in a hard stop, not an imaginary stop, not no stop, a hard stop, and therefore you have predetermined the outcome of the risk, meaning worst case scenario, this trade doesn't work, I've lost $150. Okay, so then therefore you have a preset, predetermined outcome, worst case scenario. This is what we're talking about right here, all right? And some levels of risk do not have a predetermined outcome, and yet people ignore that fact. You know, Not using stops means you don't have a predetermined outcome. I say this to people, but I know some people don't like to use them, but the fact is you should still have a monetary one in your head. And if you let yourself get away from yourself, you may not take it out at the stop. There are other levels of risk in life as well, too, that do not have a predetermined outcome, and people ignore this fact. Let's look at some examples of different levels of risk, okay? Swimming in unknown waters. You go up, you want to go surfing, you want to go swimming, you went on a vacation, and for some reason, unbeknownst to you, there's a sign now, it says caution, riptide. Riptide or sharks or, you know, some kind of cautionary note by the beach, and you're on vacation, you paid all this money, what are you going to do? Are you going to ignore the sign? Are you going to ignore the sign in the day and decide to go swim anyways? Well, if you do this, then there's an unknown outcome. You might end up being okay and swim and have a great vacation, or something bad might happen to you where you're caught in the riptide and we never see you again. Okay? This is one level of risk with an unknown outcome. Casino gambling. Look at this guy. He's completely out of control. This is one level of risk. There's an unknown outcome. Sometimes when you go gambling, you place a bet, you set a bet, okay? You put the money up. But everyone knows that with gambling, sometimes our emotions get away from us, and we go into it saying, I'm going to go on vacation to Las Vegas, and I'm going to take with me $2,000. And when the $2,000 is gone, I'm done gambling. I'm going to just enjoy being in Las Vegas. You know how many people just run to the Mac machine then and get more money? Lots and lots of people. This is why casinos make millions and millions of dollars. The reality is that casino gambling should have a certain amount of risk when you go and decide what to do in a set pre-planned amount. But then again, are you going to keep yourself under control when you're down a certain amount and say, I'm going to stop? I'm going to stop. I think my luck is not with me on the side here. My luck is not with me on this vacation at the casino. I don't know why, but I'm just going to try to make the best of it. Okay, and you go into it with a predetermined outcome that you're only going to lose $2,000. So therefore, you should have been okay with losing the $2,000. Do you follow what I'm saying? That's the reality of the story. So the next kind of risk is card playing. Many people just play poker and they play cards. They have groups. I know a friend, he meets with his friend every week. They play cards and they play for money. Okay, you know, a couple $100 here or there, it can get up. But the reality is that this is one level of risk. One level of risk when you just go to play cards with friends if you're playing for money. Or even if you do sports. Sports betting for money. People do that lots of times. They tend to do it a little bit. The ponies, whatever, they go to the racetrack. They're betting, card playing. All of these things are different types of risk that should have a predetermined outcome when you decide what you're going to bet and make, but then you have to stop. And if you don't stop, therein where it becomes the problem. It should start out as a predetermined risk, but if you go with a bankroll actually more than what you're willing to lose that you feel comfortable with, that is not going to end in a good result. All right. Having an operation is another predetermined risk. Something could be wrong and you have to have an operation and you don't know what's going to happen. They put you under. Every time you go under in an operation where they give you anesthesia, anything can happen to you. It's not a good idea to get anesthesia unless you have a serious something wrong with you and you have to do it. The reality is that anything can happen. You're trusting your life in the doctor that he's going to do right by you, but there is risk. The outcome is unknown. So there is no predetermined outcome actually in risk when you get operations in the medical industry. You don't know. Same thing when you decide to take a drug if you're sick or do something. Having an operation does not have a predetermined risk. You do not know the exact outcome. It is not like taking a trade and putting in a hard stop with a certain amount of money. I'm talking about different levels of risk. All right? Falling in love is a risk. If your heart gets broken, you're going to be depressed and you might, turn into a miserable person. You're all happy-go-lucky. You're in love. You met a fabulous person. Your life is great. And all of a sudden, something happens. They break up with you. And you feel like your life is over. And you're miserable, depressed for 6 months or a year. Or you get married and then you get divorced. Falling in love is another kind of risk in life. Jay is saying, I break your hearts daily. I shouldn't break your hearts daily. And I'm calling good trades that should lift your heart. I should be lifting your hearts every day, lifting your spirits. I hope so. But the reality is that falling in love is a risk. I cannot tell you how many fantastic young men I have met and dated in the last 5 years of my life that my heart just goes out to them. They are so afraid of falling in love. They adore me, but they are so afraid of falling in love and getting serious in a committed relationship. You know, this is the world we live in. So the reality is that falling in love is a risk. It's a risk for many people, male and female. And you have to look at that with an undetermined outcome. You do not know the set outcome. When you decide, we don't even decide to fall in love with somebody, just fall in love, it just happens. But you do not know the outcome. Is the outcome that the bond is going to be there for eternity? Or is the outcome going to be that you're going to get hurt? You don't know. Again, it's not like taking a trade and saying, I'm going to risk $150. I'm not going to fall in love with this person and risk $150. I have no idea what the outcome is going to be. I am taking a chance. Okay, I'm taking a chance and I do not know the predetermined outcome. Same thing having an operation. I have faith, I have hope, I believe in the doctor, I believe in my lover. But the reality is that you do not know for sure. I had a great conversation with someone, he's not here today. He feels that he wants so many guarantees with trading. You know, he's thinking about taking my class, and he probably will take my class at some point in the future, not now. He wants 100,000 guarantees. You know, there is no such thing. There is no such thing in life. There's no such thing in love, in trading, in money, in gambling, in operations, in anything you do. You want to walk out of your house, get in the car, drive down the street, get on an airplane. You're at risk. Okay, get real. This is reality. This is life, and it's the same thing with trading. It's the same thing with trading. So if you make a decision that you want to trade, then ante up. Okay, just say, I am willing to take the risk to learn this thing and commit myself to doing it successfully because I believe in myself and I believe in the market and I want to have a nice life. I don't know when that is all going to come together for me. I don't know how long it's going to take me to learn this thing. It might be 6 months, it might be 2 months, it might be a year, but you're committed to the process, knowing that you have no guarantees of anything. One thing I can guarantee you is if you quit or never try, or never even learn from someone like me that really knows how to trade well, then you are not even going to give yourself a chance. It's just like falling in love. I meet these fabulous young men. They're so afraid of falling in love. And my heart goes out to them. Okay, the reality is you have to be willing to take a chance. There are no guarantees. And if you don't put yourself in the position to even do it, you will not see the fruits of what anything could bring in your life for you. I don't care if that's relationships or money. It's all the same thing. The risk has to go full throttle with everything. And I think this is what has made me figure this stuff out so well in the market is I did put myself into the position where I did risk everything. My time, my money, you know, my relationships that suffered during the time that I was learning how to trade. You don't have to do what I did, but the reality is you do have to take some element of risk where you're not going to know the outcome. And you have to be willing to do it. And then you go into trading and you say, I'm in this thing. But you have to have, when you sit down to press the buttons with your monitor, with your account, a certain amount that you're willing to risk, that you're comfortable with, and not go beyond that. And that's what we're going to talk about next. Okay. So the levels of risk. There are different levels of risk in life, and there are different levels of risk in trading. The best risk in trading is calculated risk. We cannot make a predetermined amount of risk in everything in our life, as I just discussed, but we can in trading when we press the buttons with real money, and we can by doing that how? With calculated risk. So what is calculated risk? There are different levels, okay, of risk in life, and there are different levels of risk in trading. The best risk in trading is calculated risk, and professional traders only take calculated risk. Professional traders only take calculated risk. Now, what does this mean? That means you can say, I'm going to risk $500 in the day. If I start to get over that a little bit, I'm going to, it's okay if you lose $50, $60 over it, but then you got to stop. If you say, I want to risk $1,000 a day, and you get $100, $200 over, then you have to stop. You know, you have to realize when you're getting out of control. Everybody that's a professional trader has a certain amount of risk. It's calculated risk. If they go right up against it, be aware of that. And if you can't handle it, just stop. You know, you have to determine what the predetermined risk is before you begin to trade on the day and per the trade. Professional traders are not excited gamblers. They don't look like this guy. They say, I'm going to do this for a purpose, for a reason. This is why I'm doing this thing. I know I like this trade because I like the gap. It rates this many points. and therefore I'm going to do it, and I like the trade, and it's going to work, and I'm going to look for this target or a move into reversal time and take it out. They're not excited gamblers like I'm going to make $1 million today. I'm going to risk, 3 times the amount of my risk, for the entire day, or that I'm going to do something crazy. The thing is that, professional traders have calculated risk in their regimen, in their trading plan, I call it. So what is calculated risk? It's a chance taken after careful estimation of the probable outcome. This term uses calculated in the sense of planned with forethought, a usage from the mid-1800s. So the reality is that this is a term not even that old. It's not like this term was founded like at the dawn of time, this idea of calculated risk. Everybody knew what risk was, but not everybody knew what calculated risk was until we started really discovering things in the world, and science and math became a part of our lives, which is around, the 1800s. And we started to really develop as a society, and we look at it as a chance taken after careful estimation of the probable outcome. So therefore, we estimate what is the probable outcome. If this trade works, then I will make this much money. If the trade does not work, then I will lose this much money. Therefore, that is calculated risk, okay? It's planned with forethought. We have it in our heads. And more than that, we have to be okay with it. So worst case scenario, it doesn't work out. What are you going to do? What are you going to do if it doesn't work out? Are you going to stop yourself? You're going to fall off the wagon. I could talk all day long, all day, all week for the next year about things that have happened to me since I started trading. You wouldn't know what to do with yourself of stories that I tell you. I tell you stories you wouldn't believe. In fact, I called Tom yesterday. Tom is my friend. I called him yesterday to say, you're not going to believe what I did, which is I stayed in PWRD till 3:57, got out at 1 penny, near the low of the day. Whenever I say that to him, he's really not sure what's going to come out of my mouth. Sometimes the things that come out of my mouth are stuff that isn't amazingly good, which is what was the case yesterday. And sometimes it's something that he cannot believe that I did. Not believe. Now, that hasn't happened for a long time, but the reality is, this is trading and anything can happen. Okay, there has to be some level of calculated risk. I can speak better than anyone in this regard, because when I decided I wanted to learn how to trade, I thought I was going to make millions of dollars immediately, or at least in the first 6 months that I was going to make tons and tons of money. And that did not happen. The difference between me being an educator, a mentor, a teacher to people is I'm not telling people they're going to do that. I'm telling people realistically that if you learn how to trade, you can make a living doing this. You actually can. You can make a living doing this, and you can sit in front of your computer at home in your pajamas for 3 hours a day or 2 hours a day or 1 hour a day. Are you going to make millions of dollars doing this immediately? No. No. And if someone had told me that, which nobody did, they were sold me a bunch of poppycock, all right, to get rich quick scheme, which the market isn't, then I would have been a lot better off. The reality is this is possible. You must learn from someone good. You must learn what to do. You must take calculated risks. You cannot be a gambler, and you have to take your time. If you take your time, you're going to make more money faster than if you don't. All right? And if you do well, you can make a lot of money trading. You really can. But you have to learn what to do, and you must take calculated risks. You must take some risk, or you're not going to be able to do it, but you must take calculated risk. People want to know when am I going to make this much money? I don't know when. I'm not your brain. I'm not inside your head. You do realize that trading involves money as an object, as an issue, as an emotional thing that goes on for people, and every single solitary person that decides to do this has lots of stuff, okay? And that is different for everyone besides the learning curve. So however long it takes you to move through that to get to the point where you're successful is up to you. It's up to you. All right, it's up to you to do it. The thing is, I'm telling you that it can be done. The timing for that is different from everyone. And if you want to do it, you can. I guess that's the thing is, if you want to do it, you can. And if you want to do it, you can be successful. And this could be your career, or a secondary career, a side career, something for your savings, whatever you want to do with it. You can choose. You can make the choice. Calculated risk in trading comes from having a specific trading strategy with a solid play that is detailed. If you do this and incorporate the right strategy with money management, you can make a lot of money with reduced financial risk. This can result in significant profits and results if the play is based on technical analysis and mathematical numbers. So, once again, we had a plan of action with that EXPR, we played it very, very well today. All right. And we didn't go hog wild in that at all. And everybody should have made money in that with me today. Candle's saying he wants to make millions of dollars in this room. Well, the way you trade, Candle, I don't know. But, you know, we'll talk about that later. You know, we'll have to see. Over time, you can make a lot of money trading. Not immediately, not the first day, not the first week, not the first month, and not the first year, okay? If you are profitable trading the first year, you're a very good trader and you're doing something right, okay? And this is what I'm trying to teach people. Now, what amount of money that is, it depends on every different person, and that depends on how much you're willing to risk, okay? As well, what can your account stomach? Your account has to follow you through to take you to the point from point A to point B. How are you going to get to the point where you're good? You got to learn. You got to either trade in a demo or trade small size in a real account. But if you go too hog wild in the process of learning big on your account, you're not going to make it to give yourself a chance to succeed. Okay, to make the millions of dollars. And the millions of dollars it doesn't even come into play at this point. Once you learn how to trade, do you know that people will give you money? All right, they will give you money. They will give you money, say, here, take this money, trade it for me. And then all of a sudden you're trading this person's money and this person's money and all these accounts, and you have these opportunities that just come out of the woodwork. All right, the reality is that relax about it. Once you learn how to trade, there's plenty of people that are willing to give you money to trade. So, is risk a foreign concept? Is risk a foreign concept to you? If it is, then rethink where you're at with your trading. You must get to a point that the risk you're okay with. If it seems like a foreign concept, like a concept where you're in outer space about it, and you're back and forth, just, back and forth emotionally about the whole thing about the risk, stop and regroup and rethink. If you're having a hard month, back it off. If you're having a hard week, back it off. You got to be okay with the risk. Whatever risk the amount you're taking, you have to be okay with it. And if you are, you're going to be okay. All right, you're going to be a better trader for getting yourself okay with the risk. So is the idea of taking risks to earn a lot of money a foreign concept? Absolutely not. The idea of taking risks to earn a lot of money is not a foreign concept. People do it all the time. People have done it for thousands of years. It really doesn't take a lot of intellectual innovation to risk a lot to make a lot. It really doesn't. I mean, this is where the whole gambling thing comes into play. Of course you can risk a lot and make a lot, but is that really using your head? The real innovation comes by defining specifically a way to earn a lot of money by risking less, by lowering the risk. And that's the genius of the Golden Gap entries and system, which is what I trade. This is how I trade. This is how I traded all morning with you guys. Real genius comes with new ideas, and real genius involves real innovation. This is about real innovation. This is about finding a way to make money in the market, trading with a strategy and one play at least or several plays with a limited amount of risk and a big reward. Now, there's many days that we get that. EXPR could have dropped today to $15 and set up perfectly, and we could have gotten the whole thing and nailed it. Instead, we took our time, we had a good trade, we made money and we stopped. You have to have the innovation to know exactly what it's supposed to do to get it in at the right place and the price and the play. If there's one thing I tell people, that they're so important, is that there is not just one thing about trading that makes or breaks it. You've got to have it all. I wish I could tell you only needed one thing or two things or three things. You don't. You need it all. All right, so just know that in your head going into it and just try to get good. And you can get good. It's 100% possible to get good. That's the great thing about it, because we are human beings with wonderful minds and we're innovative. I'm innovative. The 26-point rating system I created to trade gaps is innovative, 100%. And so are my entries and how I'm looking at these stocks to trade them. Real money comes with a plan of action in place before you press the button. It is not about being in love with trading. It's about being in love with making money. And being in love with making money, okay, is going to allow you to book money and not be greedy because you know you deserve it and you're going to get it right. And you're patient with waiting to make the millions of dollars, which may come at some point in the future once you learn how to trade well. Okay? So how to achieve this with less risk? How to make money with less risk is what we're going to talk about. And what does less risk mean? Trading with less risk means you need, number one, a great strategy, which I feel I have with my Golden Gap system. Trading with less risk means number 2, you need solid entries. I have those too. I teach 6 in my class. I don't care what one you do, but pick one that you like. And this goes for everybody that's a trader, no matter what you were doing. You got to have one play that you were like, yeah, every time I get this thing, I love it. Whether it's a 15-minute, a 5-minute, a 1-minute, 2-minute, a trade into reversal time, whatever. You got to have something that you just are solid on for your entry. And if you don't, get one tonight before you take another trade tomorrow morning. This is so important. Trading with less risk means you need, number 3, a game plan for the money management. This is important too. I'm not going to let myself go over this amount of money risk in a day. I'm not going to let myself risk this much more in a trade. I'm not going to give this much back in a trade, whatever that money management happens to be. Trading with less risk means you need, number 4, trading with less stress because you know the game plan ahead of time. What does this mean? This means not making decisions in the heat of the moment. I absolutely, totally love this thing and I'm going to just go after it. And all of a sudden, you know it, you're down like up against your stop loss. No, the game plan has to be ahead of time. I'm going to allow myself 3 trades in this today, or 2 trades in this today, or 4 trades in this today, or whatever it is. Okay. And then you got to stick to it ahead of time before you press the button or even take the first trade. It's about calculated risk, planned forethought. That is how you trade properly, with the knowledge, with the information. Do not take stupid risk. What is stupid risk? Stupid risk is risk for the sake of risk. Risk for the sake of money. Risk for the sake of any money. Any money. I'm desperate. Help me get out of this. I'm down for the day. Please, 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 EXPR, work and go back down in the day so I can make my money and have a huge big day today. I want this to drop $3. It doesn't care. Okay. It's not about risk for the sake of the money. Nobody cares if you're up or down. The market doesn't. The market doesn't. The stock doesn't. Can't be about for the sake of the money. It has to be with a game plan of the strategy following through or not on the day with an entry and an exit. Risk for the sake of trading without any game plan or real entry point or target is really bad too. And this is just stupid risk. You cannot trade like that. The market will eat you alive. Don't let it happen. The market, however, the interesting thing about the market, okay, is that it really loves people that know what they're doing and like to book money and pick good things and have a good strategy to play. The market will pay you consistently with that. The market loves people like that. There just isn't a whole lot of them out there. But when they come up, the market says, ooh, you're special. And the market starts to pay you over and over and over and over again. So do not take stupid risk. Trading isn't gambling. It's not about trading for the sake of playing a computer game. It's about saying, I am going to risk this set amount, and I'm not going to go over it. And it's okay to go over it a little bit every once in a while, but not a crazy amount. And everybody has bad days, but you have to keep yourself under control. I'm telling you, if you do, the market will reward you. It's one of those weird things. It's just one of those strange, weird things where if you do the right thing, the market will say, you're special. I want to pay you, the market says. Okay? Just like EXPR today. The EXPR today said, congratulations, Melissa. And so did PWRD yesterday. For doing the right thing, for waiting, for not going hog wild after it too soon. All right? For getting at the right place, for getting out at the right place for everything. It wasn't as big as I wanted, but who cares? It's money. Again, no greed. So learn correctly and learn how. Learn correctly and learn how. What does this mean for you? It means that if you know how to trade with precision, it is possible to earn more risking less. Precision trading will give you a better risk to reward ratio. Instead of making only 2 or 3 times the amount you risk, if you trade with precision, you could increase your profits to 5 or 10 times the amount you risk. It is all about knowing how to play it and using a plan. I misspelled that there, but that's what I meant. You need to know how, when, and where, and what you want the stock to do. If you learn this, you will be able to earn a lot with much less risk and also much less stress, which also is very important. And trading will be fun for you. When you have a set thing you do and you're not overly concerned about the risk, it becomes a lot less stressful. And therefore then a lot better quality on your day and your morning and your life when you're doing this thing for work. Remember, this is not like a regular job. We can control our own stress. We're not reporting to a boss. Somebody isn't, banging on our door. The phone isn't ringing off the hook, driving us crazy. This is us doing what we're supposed to do, controlling ourselves and making our own decisions. All right? So it can involve less stress. Gaps provide the best scenario. Most of the stock moves that provide plays with a little risk and a lot of profits happen from stocks that gap. There are many stocks that gap, but only good gaps can be played in this fashion. It is essential to find the best gap to play. Good gaps are what I call golden gaps, okay? So these gaps are evaluated on a 26-point rating system of requirements that they have to meet, which is taught in the Golden Gap course. And this is a class that I teach. Trading is fun with calculated risk. It is fun. But you have to predetermine that ahead of time and be okay if the thing doesn't work out. And that's just part of it. It's just part of trading. If you are and you can be okay with it, you're going to get to a better place in your head. You're going to trade better overall. And you have to have a good strategy that you know works. So here was a trade. This was SPLS daily. And I'm going to go over an example of this. This was the day that it gapped down. This was back on the 6th. It ended up playing out much, much better than I thought when I looked at the gap on the day. But it was a gap, okay? It was a gap that rated well. And the 1 minute entry on this, I actually called it in here and then it triggered a little bit later than I thought, was a beautiful entry. It was right in here and then it dropped. This thing I think even went past, yeah, it did go past the target, even this 200 period moving average, went dropped and into the target. But of course, you have to manage this on a certain amount of day. So here was the entry. Entry time was $9.39. The price was $12.84. We'll go back and look at it. Stop was over $12.91. It was 7 cents. So if you took 5,000 shares of $350 risk, you had to get out on the bounce. I'll show you it. The profit was $2,600. You made 7.4 times the profit on the amount risked in one play. This is where I think the amount of risk really comes into play with the precision for me in my trading, because I'm always looking for great entries with tiny stops to maximize my risk to reward on my trades. It's almost like I don't want to take a trade if it's a 2-to-1. I'm trying to get to, if it goes to the target, 10, 12, 15, 20, okay? And if it doesn't, I have a move in it with at least 3, 4, 5. But the reality is, most of the time that I'm taking trades, I'm looking for to the target a big risk to reward. And for a move, if I can't stay in it to the target, at least I'm getting paid something, which is way more than 2-to-1 or 3-to-1. And that's what this was. This wasn't even to the target for the exit in this. So here was the entry. Stop over here. You have to get out though into this bounce here, and you should be trailing this down with the stop over this area each time in here. Look. And then I have a certain amount, which we talk about in the class, where you have to have an exit rule into reversal time and a reversal, and here it is. So you have to be out of this here. All right, which it went under, it continued down, because look, it actually went down here. The target, the first target was below that and down in here. Again, you're playing it to trade to make money, not for the target. Okay. Anyways, that was a 7.4 times profit on the amount risked in one play, and that was not to the target. That was not to the target. It went to $12 of the day, it went 30 more cents. You could have made even more. Again, you don't know for sure if it's going to go to the target. What are you going to do? You have to make money in chunks. It did reset up again, though. It reset up again on the 15-minute chart, which is what we were looking for some of these plays to do then again. Set up a second time. Sometimes they do, sometimes they don't. That's why you play them at least once and make sure you get out of at least half or the whole thing on the first drop. But as it turns out, this had a beautiful 15-minute setup into a good time, which was the reversal time, past the lunchtime. So here was the lunchtime one. You could have done it, but this was actually a better play in here if you waited, because you didn't know if it was going to go full on in here because it was a little bit early. But the gap was good. It held up here at the high. Here was the entry in here when it broke with the stop right over here. And do you know it never backed up over this? Never, never, never backed up over this. And here's where it fell off into a cliff, then into the close. The entry time in the second play was 145. The price was $12.41. The stop was 6 cents on this play. If you risked $300 or 5,000 shares on this, and you stayed in it till the reversal time into the close, if you did that, you made $15.50. Okay. This play alone, if you just did this play in the afternoon, was over 5 times the amount of risk. But here's the thing. You did the one in the morning. In an ideal world, you stick with one thing all day long that continues to play out. You do the morning one, then you're ready up, then you do the afternoon one. What do? Well, you have a set amount that you're going to risk, And you're going to keep something no matter what. I always like to trade like this, okay? So say you did the morning trade and you were up and you made 2,600 bucks. You can risk a portion of that. You can risk half if you like it, or you risk 30%, whatever you want to risk. If you take this and risk this amount here, you would still be up $1,700 no matter what, even if this play failed. And $1,700 is a good amount of money to make in a day. And if you like the play, you can retake this stock. It's heavily traded. You could certainly take this much size in this and risk 6 cents. And you get out on the reversal time the same, and you would have made $46.50 in this play, plus 2,600, you would have made $72.50. And the initial play in the morning was $350. And you made 20 times the amount of the reward risk play out on the play. So this is innovation here, to use these things to play like this. Do we get these every day? No. Do the gaps continue for a second setup on the 15-minute every day? No. Some days they do, some days they don't. Red Hat actually yesterday continued and did this kind of move. If you got the first drop in the morning of Red Hat and the second drop in the afternoon of Red Hat, you could have done it. Okay? So, and actually SPPI did set up again in the afternoon today too. We can go back and look at it. I don't remember the time that set up. If you stick with one thing and want to play it through all day, you can definitely do this. You have to still manage yourself from the morning profit accordingly, because you do not want to take a second trade in the afternoon and risk the whole amount that you are up from the morning, because what if it wouldn't work? You still have to have calculated risk. This is the whole point about the calculated risk. What's the calculated risk? The calculated risk is, I made 2,600 this morning. I'm going to risk 900 here. If it doesn't work, I've made 1,700. That's calculated risk. I have not risked half my day. I've risked a portion of my day. That's all. So that's where that forces you then to stop and not be a gambler. A gambler would risk everything. You can't do that. You just can't. Okay? So earn more risking less involves step 1, find a good gap. Step 2, find a good entry and play it with precision. Step 3, to take a second play that sets up again with precision, which could be the afternoon play or a second play in the morning even. And use some of the play number 1 profits to earn more with less risk, because you are already up on the day and profitable from play number 1. And this is how you can earn way more, risking a lot less. Do you know, if you can get to the point to do this, how great it would be that you would have to only do this twice a month? And you can't lose, you know, in between some huge crazy amounts of money. But if your risk is 300, 350, 400 bucks on a trade, you know, you can have a couple losing days in the month, 2 or 3 days like this, some small, medium gains in between, and you are making good money trading. Not millions of dollars, but certainly a living. You can make over 250 grand a year. And if you're doing that for a year, and if you're doing that for 2 years, you're gonna be able to make $500,000 in 3 to 5 year span of time, and then you'll be making $1 million after that, and then you can write your own ticket. So the reality is, you have to be patient with yourself. You have to. The numbers are there, they work. You have to play like this though, assessing your risk all the time, getting good gaps, getting good entries, knowing that if you took this play, the stop didn't have to be over here. It's not what I was looking at in the XPR. And by the way, I see this on my other thing. It actually, remember I did say at one point today, this thing could actually go all the way up to a certain number. I'm gonna go look at it when we're done here. But I see what it's doing. That's exactly what it did. You know, I almost think that the plain tight is never a wrong answer. It's just interesting. You know, we'll go look at it in a minute. So this is the way to do it. In summary, the initial risk in the day was $350, and in play number 2 had not worked, you would have made $1,700 on the day. So you would have kept some of the money, more than half. The best case scenario was for play number 2 to work like play number 1, and the result is you made $7,250 for the day. $7,000 on a day trading account, and $15,000. Let's see how much buying power you would have needed for Staples. Well, you would have needed at least $200,000 in BP. That's not crazy though. You know, that's not crazy. It's just not. All right. It depends what kind of account you have, but it's not like you needed $1 million buying power. All right. And even if you did half that, you know, you would be okay. You would still would have made $3,500, $3,600, even if you had only 100 grand in BP, which is a lot of money to make on a day in a day trading account. So that is how you do it. You risked a little and earned 20 times the amount you risk by properly assessing the risk and taking calculated risk and precise entries and following through in the stock that had a good gap that you liked. Earning 20 times the amount of your initial risk is the way to make a lot of money trading. Is this going to happen every day? No. But when it does, you need to do it. All right? And it happens more than you think. And that's all that you need. But you do need to know how to do it. The opportunity to make a lot of money trading exists in golden gaps in the precision and the entries. So this just goes back to everything we're talking about in the morning. Number one, or in the beginning of the seminar here. Number one, be willing to take risks to learn how to trade properly. And be willing to take calculated risks then when you trade. So there is an element of risk that's involved, but you see the payout here is there if you decide that you're capable of doing it. All right? And that's how you do it. This is how you can maximize a small account and grow it into a larger account. You must have a good gap to play to accomplish this. That is why I use a 26-point rating system to find the best stock to play in the morning. When you know how to find a good pick, there will be opportunities to trade. Good gaps provide you with moves that have great potential for momentum and also multiple plays within the move. So, how is it even possible to earn more and risk less? Number one, knowledge from the Golden Gap course, which I teach, including the 26 points. Number two, conviction in yourself and the knowledge that I can teach you as a mentor, as a trader. And number three, clarity, which the Golden Gap course provides when you learn how to read charts with precision and a clear head. The clear head thing really is important here. The clear head thing is ultra important because the reality is if you are mixed up in the head about your strategy, about your play, about your risk, you're going to struggle. And why do that to yourself? You know, I did have one person that took the class this past weekend. Travis, is he in here now? No, he was here this morning. He said, boy, you know, this is really structured, Melissa. I said, yeah, it is. You know, my class is a trading plan in and of itself with the structure in it. Telling you what to look for to pick the gap. Telling you what to look for to take the play. All you have to do is figure out how much money you want to risk. That's it. You take my class, it tells you everything you need to know as far as the structure, and it is very, 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 very structured. The only thing you have to figure out is how much money you want to risk per trade and per day. But the reality is the rest I teach you in the class. I have found that people have such an issue finding their own structure if they can't learn it from someone. And I also have found that many classes in many places do not teach a strict enough structure. They kind of leave it up to the person. They say, well, do this on a resistance, on a support, on a sell setup, on a buy setup at a reversal time. And then you're like, what? I mean, it's just not structured enough. You have to have some level of structure in what you're doing with your trading to be profitable. It's the make it or break it. Otherwise, how are you going to define, once again, the risk to determine if it's worthwhile? All right? So it really has to do with the knowledge. It has to do 100% with the knowledge of what you are choosing to learn, and take it upon yourself to learn it. And do not be overly concerned if you're not making $1 million right away. Say to yourself, I believe in myself and I believe in the market to pay me, and I really like this thing I'm doing. I have conviction in these gaps. I see the moves that they can make. I see the consistency in the way that they can run, and I want to make money. First, I have to learn how to do it. So if you want to take the Golden Gap course, it teaches you how to get one strategy, one play. You need to start making money trading. You need to make money more than you want to trade. You need to believe in the person that is teaching you, which in this case is me, and you need to believe in the market, and more important, you need to believe in yourself. I talk to many people. I could talk to them all day long. There's no way I could tell them to believe in themselves. I realize after a certain point of talking to people sometimes, and there's nothing I could say to them, they flat out just don't believe in themselves. It's a lack of self-conviction, nothing else, not the market, not anything. You've got to believe in yourself. If you don't believe in yourself, do you think the market's going to believe in you? Absolutely not. And like I said, the market pays people to do it right and pays them handsomely. And you just have to stick with it, and you have to believe in yourself and learn the right stuff. Believing in yourself is going to help you through the times when you're learning, through the learning curve, because you're going to say, you know what, I believe in myself. I know I'm smart enough to get this. I got to stick with this thing. Yeah, I made a mistake yesterday, but you know what? I'm going to do better tomorrow. I'm not going to quit. I'm not going to give up. I know I can do this. Okay? So the Golden Gap course is a course that I teach, and it teaches a 26-point rating system to find the best gap to play each day. 26 things I'm looking at to rate it. This 2-day seminar also teaches 6 different plays, and I don't care which one you do, but you got to get good at one, and the swoosh is one of the plays. Each play teaches how to enter and exit the gap trade. And the swoosh, again, is one of these plays. It's my signature play. It's one of the big plays. I'd love to see if we could get one this week. I don't know if we will. But the play is important because that's how you make money. I mean, look at how we made money shorting that EXPR today, and look what it's doing right now. You know, that is a great example. And I'm going to bring up the chart when we're done talking here of everything I just talked about in the seminar, actually, without even knowing it in real time, what that thing actually did. So the Golden Gap system is a system because it teaches you everything you know how to do to trade with structure. And I think that's important. And I think people do not have a full, solid structure. And when I say structure, I mean structure. If it does this, you do this. If it does this, you do this. If it does that, you don't do it. Boom. That's it. End of story. No. It looks at lots of things. All right. So the Golden Gap course is more than a course. It is a complete system. It is a system that gives you conviction specifically because it is precise and complete. The precision in the strategy in 2016, you're looking at a stock should give you conviction. The precision and detail in the system will help you to earn more money by risking less. And ultimately, this will translate into your taking more size in your trades, like the example I used today, which ultimately will allow you to make more money. And that's where you have got to be. It is about taking size in trades to make money with precision, okay, on good gaps. That is how you're going to earn good money trading. You're never going to earn a lot of money trading, take 100 share lots for an entire year. You're just not going to do it. You have got to get to a point where you get so good at something that you can take the size. And if you can't get good enough at something, you should never be taking the size. There's people that take size and they aren't good. And then it's a real big problem. How are you going to know when you're good? When you see something that works over and over and over again for a long time and you're making money and you're making money in small size or in a demo account, and then you build it up and you build it up and build it up. And I'm not talking about a week or a month. I'm talking about consistently over a period of several months, you're making money. Yes, great. I'm paying myself checks and checks and checks every 2 weeks. You get to that point, you say, yeah, I'm ready to step it up. Some people have a big issue with size. They just shiver and shake and quake and can't do it. Can't press the button. Can't take even more than 1,000 shares or they get freaked out. If that's you, then work through some of the issues. It's not about the trading then. Sometimes it's other things. Call me, talk to me about it. But the bottom line is until you're comfortable with it, you can't do it. You can't do it until you're comfortable with it, with the size. But first you got to get good at something. So the reward comes from the precision. And the precision will allow you to take size. And the precision and the size will allow you to take days off trading when you don't feel like trading, when there isn't anything good, or when EXPR fails completely as a move on the day. That will say, okay, fine, you know what? I'm not going to get a huge play today. It's not the end of the world. And that's because you might have gotten a really good play in something else last week or last month or 2 days ago. So the Golden Gap system, the more often you realize how you can make money on a consistent basis, the more confidence you will build in yourself and the more conviction you will have in your own ability to trade well. I just cannot tell you how important it is to have conviction in yourself. If I talked about it over and over and over and over and over again, I could never talk about it enough how people have to have conviction in themselves. One of the most valuable things that you learn during the Golden Gap course is to have conviction in the Golden Gap strategy. I can teach you through my teachings to have conviction in yourself, but ultimately that's up to you. Maybe once you learn a good strategy with some good plays, though, you will start to get better conviction in yourself. That's 100% possible. Okay? Staying positive might be a challenge for some traders, but it is a requirement for success. And you need conviction to help you produce positive results. It's about being persistent and having persistence. If you've been putting off learning how to trade or learning how to trade properly, then ask yourself why. The best job security comes from self-knowledge and self-empowerment. Make your own choices for your financial future. Know that you can do it and empower yourself to do it. Remember, I would be the teacher for you, but you're the one that has to do it. I'm empowering you with the information. If you decide to take my class, then I'm empowering you with the information. You're the one that has the power to do it because I'm not pressing the button for you. You have to do it, all right? So it's through knowledge and education and a complete system, which is the Golden Gap course, which is a very, very structured system, okay? and it's about results. It is really about getting the results in your trading to help you move forward so you can get to the point where you're taking sides and you believe in yourself and you can risk more money. Until that point, you need to learn it. So the next class I'm doing is March 23rd and 24th. I was going to do the next class in April, but I had a bunch of people that called me very late on Friday that wanted to do the class. And I said, you know what, I'm going to do another class then in March, you know, for these people that want to learn before second quarter earnings season. So I'm doing a class next weekend, March 23rd and 24th, which is 9 a.m. to 5 p.m. The cost of the class is $15.99. And, you know, you have to decide if you love trading and love making money. And if you do, then I think my class is an amazing class to take to learn you something that is profitable, that will result in you really getting a solid foundation with structure, which many people don't have and can't even offer people. And, you know, if you're interested, contact me. So the room, which is free the rest of the week, the hours are 8 a.m. to noon. If you're interested in joining the room, contact me for this. Again, I only trade gaps. It's a very focused trading room. You saw that today. That plays gaps based on technical analysis. And I'm offering for free with any class participants in March the wealth manifestation class as well. The people that took it last weekend are getting this class for free at the end of this month. The people that do it next weekend are getting this class for free too. And honestly, there's so many people I think that need this class actually to help them with issues that they're having. People that are having issues in their trading that really just need this class. They need this class more than anything else to get their heads on right. It's just one of these things where sometimes people know how to trade, but they have some kind of blockage, and that blockage may just be something that's going on in their mind, in their head. Okay? So this class, the wealth manifestation class, is going to be March 27th, 1 to 4. The cost of the class is $350 if you want to do it on its own without the gap class. And for anyone that does the class, the Golden Gap class, they're going to get this class for free. And anyone that joins the room for the month of April, if you pay $350 for the wealth class, you'll get the room for free. So you're really getting the class for $100. Okay? So I hope you had fun and learned a lot. If you're interested in anything I had to say today, please let me know. And let's look at EXPR really quickly here because I've been watching it since the last thing. Hold on. Let me take this off. And I'm just amazed at this actual rally in this thing. Hold on. Let's look at it. Okay, hold on. Let me bring it up.